Hi everyone, I am going to go through 3-13B, which is similar to 13A that you have for homework for this week. This may be a somewhat lengthier video than I would like because I want to walk you through the entire process to make sure that you understand exactly what you need to do for this week. So in the book, you're giving the list of accounts or the chart of accounts. This is a great thing to use to actually create your trial balance. So you can go ahead and get that started before you even begin the problem. So what you're going to do is you're just going to list each account. So you're just going to go on down and just list every single account. This will be used after you finish the T-charts. But if you do it now, it'll save you some time of flipping back and forth between the pages later. So really depends how fast you type. If you need to, you can abbreviate at first and then go back in later and then enter everything again. I usually find it easier just to go ahead and get it done all at once, and then you don't have to worry about it. Okay, so that part is done. What we have to do now is we're given a list, a rather lengthy list of transactions, and we're going to have to put it into the accounts that are affected like we did in 2.9. What you need to remember is since we use the double entry method, every transaction is going to affect at least 2 accounts. There's only a couple that we're going to have to do for this week that affect 3 different accounts. So let's get started. Also, if you look up here at the top of the T accounts, it gives you a little hint as to which accounts are increased and decreased with what. So that helps a little bit as you're going along. Okay, so for the first transaction, we invested cash in the business like we did on 3-3 and on 2-9. So we're going to show that we increased our cash account for $30,000. I'm going to change the formatting to show that we're using dollars. And then we're going to increase our capital account. So if you see, each account has what you use to increase or decrease it with, which is a big help when we're learning how to do this to begin with. Now it looks like we purchased a van for cash. So we're going to decrease or credit our cash balance for $8,000. And then we have to increase our asset. We're showing that we purchased a van for $8,000. Now for letter C, we purchased plumbing equipment. So it looks like we purchased it for $4,000. And since it lists on account, whenever it says on account, it's either going to be accounts receivable or accounts payable. Since we purchased the equipment, it is an accounts payable. So we're going to have to increase our accounts payable, and we do that by crediting. If you ever get these hashtags in Excel, if you go up to the row, the column that we're in, if you look, we're in column E because that's what's highlighted. You go right between the 2 column letters to where you get this cross symbol, double click on it, and it'll automatically fix it for you. Now the next transaction is we rendered services, which means we provided service. We did a plumbing job for somebody. So we received cash, and since we provided a service, we're going to increase our service fees for $3,000. Now for letter D, we received cash. Oops, I'm sorry, let me We need E. We paid cash on account. So since we're paying cash out, we're decreasing our cash. And then we're decreasing, since we put letter C on account and accounts payable, we need to show that we've decreased how much we actually owe to the other company. So we're going to debit our accounts payable. Now we paid our rent for the month. Since it does not say on account, we're going to automatically assume that we used cash. So we paid rent for $700, and then we're going to increase our rent expense for $700. The same thing with the telephone. We paid our telephone bill, so we're going to decrease our cash account, and we're going to increase our expense. So for example, when you get your cell phone bill, you use cash in your account to pay for that. So instead of the normal checking fees that you normally use, accounting is a little different. So when we take money out of our cash account in accounting, we're going to credit it. So when you start doing this, try to forget your preconceived notions of what debit and credit actually mean, because it is something different with accounting. The next one is letter H. We earned revenue on account. Since it says on account, it means the customer has put it on their account and they still need to pay us. So we're going to increase our accounts receivable $4,000 and then increase our revenue account for the same amount. Now the next one is we paid wages. Oops, I skipped one. We purchased office supplies. So it doesn't say on account. So we're going to decrease our cash account by $300. We're going to increase our supplies account since that is what we purchased for the same amount. Wages to student, that is $500. So we're going to decrease our cash and increase our wages expense. The next one is we purchased a 1-year insurance policy. So that is going to subtract $800. And since we're purchasing it in advance, it is going to be a prepaid insurance. So for those of you that have prepaid cell phones, instead of prepaid insurance, it could be prepaid telephone or prepaid cell phone. So it just shows that you've paid for it in advance and you have access to it. Now, letter L, it says that we received cash for the services we performed on account in letter H. So we're going to increase our cash account by how much we received. We received $3,000. Now we have to decrease our accounts receivable. We have to show that the customer has paid $3,000 of the $4,000 that they owed us. The next one is we paid cash for advertising expense. So we're going to subtract $2,000 from our cash account and increase our advertising expense by $2,000. Now, the next two are ones that we have to affect three different accounts, because it tells us we purchased plumbing equipment, we paid cash, and we're paying the rest over the next 6 months. So we're going to break this down little by little. Let's start with what we purchased. We purchased plumbing equipment for $2,000. So that's how much we purchased worth. We paid $500, so we're going to subtract the $500 from what we have in our account, and now we need to find out the balance. I know this may be easy math, but it never hurts to double check. So we purchased $2,000 worth of material. We paid $500, which means we still owe $1,500. Since we owe it, it is going to be an increase to accounts payable. The next transaction, we earned revenue from services for the remainder of the month of $2,800. So that is how much we increased our revenue account by. So we're going to increase our revenue. We received $1,100 in cash. So we received $1,100 in cash. And then $1,700 on account, which means our customers have promised to pay us. So we're going to increase our accounts receivable. Now, the last transaction, we withdrew cash at the end of the month for $3,000, which means the owner took money out of the business. So we're going to decrease our cash account, and we're going to increase our drawing account since the owner is the one that took it out. So this is the first part of this assignment. Now you have to go through and balance and foot each account. I'm going to show that as well as the trial balance on the next video. If you have any questions on this part of the assignment, please let me know, and have a great day.